Hello and welcome to NDTV Profit. You're joining this special conversation that we're having with Kunal Shah, the founder of CRED. Now, of course, CRED is launching a specialized service experience of sorts to for their customers. They're calling it Svalbard. Welcome, Kunal, to this conversation. I want to first start off with the name Svalbard. Now, to be honest, I had to check what the word meant, and I was a little surprised to find out that it's a sort of a dark island in the Arctic, and I wanted to understand from you how the name ties into the product.
No, perfect. First of all, thank you so much for having me. Super excited about today's release. Svalbard is a release per se. Often hyper investigating what word I use is not the ideal thing to do. We took this inspiration because it's a special place where you can see the world in a very different light. And we believe that that's one way of kind of looking at this release and feeling extremely good about what we can do for the credit-worthy customers. We're quite happy about all the things that we are doing to actually kind of remove friction, make it hyper efficient to kind of be responsible with credit behavior and actually start enjoying the benefits of it.
All right. So let me jump into the product a little bit. So ahead of the launch today, you had a survey that told you practically what is missing amongst the most eligible customers in India, right? So their ability to know about the credit score, to do something about their credit score, and exactly how what kind of activities they need to do to ensure that their credit score remains as strong it is today. And this led to the developer Svalbard. So if you can just tell me a little bit about how this came about.
I think the biggest realization we had is that even if you think about the most affluent customers, assuming that they understand everything about credit score and credit history and what causes what impact, it always becomes this mysterious thing that, hey, what caused what impact? Can we change that? Can we make it predictable? Can we understand what will be the impact of future? I'm going to apply for a home loan. I want a new credit card. I'm going to spend on my credit card. I'm going to spend my entire limit when I'm traveling abroad. I think a lot of these things are not understood well. Our realization was that even the most affluent today, majority of them, I would say 50% of them have managed to miss paying their bill on time. Close to 70% of them struggle to keep up with managing due dates or figuring out what's the impact of credit score. And also realizing that, okay, if you are a good credit-worthy customer, what are the benefits you can have? Can you improve the rate of interest that you can borrow from, and so on and so forth? So I think the idea was very simple. Can we create 3 sharp propositions? First, we are launching something which will enhance the entire credit score experience in a material way. It will change how you understand it and kind of brought it to a level where it is not a technical jargon that only the people from the banking industry understands. Sure. It's made to a consumer level where you understand, if you do this, what happens? If you did something in the past, what is the impact of that to your credit score, and so on and so forth. Similarly, we are kind of revamping the entire credit card management experience to almost like a God mode realization that the number of cards per customers is growing dramatically, right? And we realize that people are struggling with managing different due dates. What is my due amount in each of them? What are my benefits in each of them? What are my reward points in each of them? And I think as now the average card per customer is constantly kind of creeping up, it becomes even more important to kind of create an experience that really suits customers who usually have multiple credit cards, right? So we've kind of made an experience which even makes managing 20 cards as easy as, let's say, managing 2 cards, hypothetically, right? And coming to the third thing that we are kind of launching is something called as Cash Plus. We've created the most frictionless experience for being able to borrow against a mutual fund. This is something that was usually done by HNI customers, and it was done through a more of a private wealth kind of environment. We kind of took that service and realized that if they can enjoy these low interest rates, why shouldn't it be for every affluent customers in India? And today we are super proud that we will be even launching it close to 8.99% is the starting interest rate, where you'll be able to kind of borrow against your mutual funds without having to lose the momentum of the mutual fund. You are able to kind of take some liquidity without having to cross the momentum, because a lot of time people actually, we have noticed that when they have an event, let's say a wedding or a vacation to go to, they usually break that mutual fund, which actually stops the momentum of growth. Ideal situation is that you don't want to touch it for 10, 20, 30 years and keep compounding that. and borrow it for a little bit period of time and enjoy the low interest rate. So I think those are the things that we thought it's kind of time to level up the experiences for all the credit-worthy customers.
All right. I want to break this up into the three products or the three offerings that you're talking about. Let me start with the credit score bit first, right? So traditional wisdom would dictate that, listen, if you're going to make a big purchase, let's say you're going to buy a home, you would want to, before applying for the loan, you would want to go out and check your credit score and see where you stand in the potential home loan that you will receive, right? So what's missing there? Because this just seems like pretty obvious to a lot of us, and I'm assuming this because there's some amount of background that I have, and I'm not sure if the broader public has that.
I think you kind of addressed the question. Most consumers do not know what their credit score is. We've had so many. I wouldn't name some people, but we have had some very prominent people who've reached out to me and said, "Hey, I'm not able to get to CRED." And we find out that the credit score is impacted because of a mistake that they made 10 years ago, right? And not having a clue that this is actually impacting their life materially, right? So the idea is to kind of demystify and remove this complexity, right? Because people have a sense that it matters to them, but we are not, let's say, in a developed world where it is quite very mainstream. For example, it is impossible to even rent an apartment in a country like US without having your credit score really figured out, right? Most of us don't think about this. In many companies, it's impossible to get a job without a good credit score, right? At CRED, particularly, every single member has to have a certain threshold of credit score to be able to get hired.
Sure.
I think these things are kind of lost, but I think more importantly, okay, I got a score. What does it mean? Is it good? Is it bad? Why is it bad? What is causing it to go down? How do I get to a perfect score? If you do not understand the levers, right, you just hope for these magical things to happen to you, right? It's a little bit like, I don't know, trying to get healthy, right? You can't just hope for health to happen to you. You need to understand the nuances behind it. But for the super healthy people like you, it's very hard to coach much. You know all the stuff, but that's not the norm for everybody else.
Understood. Okay, a couple of more questions. One, is this complexity more of a feature or is it a bug? Because it was not, as you said earlier, it was not originally created for people who are borrowing. It was created for people who lend. How do you, and then if that is the case, then this complexity is not really something that the borrowers were kept in mind when they were created, right?
I think you're absolutely spot on. The product was never meant to be built for the consumer. It was meant for the institutions that lend to you, right? But it's not fair to assume that I wouldn't want to make my score perfect, right? Nobody wants to be evaluated for some test that you don't even understand how to score perfect score on, right? So I think we've seen that it is harder for institutions that have built the score to kind of really kind of make it easy for consumers to understand. We realize it is best for us to take a stab at it because it's something that even when we saw our team members, when we were getting them on board, they're like, oh, but I'm not able to make it, but our score is low. I didn't do anything. And the feeling is that I didn't do anything. The question is that why does it feel like you're doing some kind of a bad behavior without understanding what is actually causing impact to these things? So I think the idea is remove this mystery around this and make it extremely accessible.
Okay. Coming to the second feature, which is credit card management, right? So one would look at it and say that, do you really need 5 credit cards? I mean, at some point in time, you have to say, okay, this is more than enough cards for my spending requirements. And is that something of a question that you can answer using Svalbard then?
Yeah, I think the credit score product is definitely going to give you a good insight that what is the impact of having more credit cards or less credit cards in terms of diversity of credit that you have on your credit score and how it impacts your future lendability, right? For example, age of credit, how the limits have been used. What's your credit utilization? Let's say if you have one card and you spend 80% of that card limit, is that good for your credit score and so on and so forth? So Svalbard will be able to kind of give you that insight and that release will make it easy for you. But let's take an example of card management, right? The consumer, as they are kind of getting more aware about, let's say I have a special offer if I use, let's say, an Amazon card, and if I have a special card that gives me some airline benefits, I think the consumers will start using multiple cards. It's just a norm, right? It has happened in every market. It's going to happen in India as well. In fact, we already see this to be quite a very sophisticated behavior in 30% of all credit card users already, right? 50% of all card customers have more than 2 cards already, right? So I think it's just a matter of time that this behavior is going to become more prevalent. As there are more benefits to enjoy in each of these cards, we will enjoy having these cards to ourselves. Now, each card that you add to your life, it brings this complexity of, okay, what's the due date? What are my rewards? What are the benefits? Can I use it at a lounge? Can I do this? Can I use that? Can I access this? Is there a free insurance on that? So all of this becomes harder and harder to manage, and you will see people struggle at the lounge that, oh, which card? Like, I'm trying to take out all these cards and like try to get inside the lounge. Can we make it extremely easy for you to manage all your cards in one place, and it proactively communicates to you and makes it easy for you to understand all of these things?
All right. Coming to the Credit Cash Plus product, which you mentioned about mutual funds, right? Borrowing against mutual funds. You're right. This used to be limited to an ultra HNI sort of cohort with access to private wealth advisors who would ensure that they would get the funds that they needed. The point that I wanted to understand from you is are you making this currently a more mass, or well, mass is probably the wrong word because your customer base is probably the best of the credit score lot. But are you making it more accessible through this, or how should one look at it?
I think the correct way to think about it is that it was largely ultra HNI and, let's say, entrepreneurs who use this product, right? And it was a great way of kind of taking very low cost of credit and kind of using that more wisely, right? But if you look at, let's say, most salaried affluent, right, or let's say people who have not been used to what the ways of working of, let's say, business families or all the ultra HNIs, right, who have, let's say, wealth managers who tell them that, hey, why don't you just borrow against that versus take this and or break your investments, right?
Yeah.
And it's been a very common behavior. But I think what we realize is that people were breaking their FDs, people were breaking their mutual funds, all of these things to kind of do a temporary expense that they could easily kind of take. But I think when they take a personal loan, the interest rates can be quite high. It can go up to 14, 15, sometimes 18, 19%, even for this cohort. So we realized that if we make it extremely easy for them to borrow against that and absolutely frictionless, without having any documents, without having to kind of go through extraordinary amount of calls and interaction with human beings, can we make it a frictionless experience where they are able to get it in seconds, and enjoy the benefit and repay that without having any penalty or foreclosures to it.
I want to ask you one last question on this entire product. You know, looking at the way the market is currently now, obviously, yes, this is a sort of a blip. It's not going to last very long, but the fear is that the value of your mutual fund units are going to be volatile, at least in terms of market volatility. How do you address that? Because historically, a lender would just foreclose the loan.
Yeah. I think, first of all, we have to understand how these things work. Today, there is a certain value given to each mutual fund portfolio that you have, right?
Yeah.
And it can range from you getting approximately 40% of that AUM given to you as a thing, or close to 60, 65%, right? That gives you enough credit, right? Because most people have now built a decent amount of AUM, at least in this cohort, right? And what happens is, only when you are in an extreme situation or not be able to repay that, the mutual fund requires liquidation, right?
Yeah.
But what we've seen in secured behavior, right? People are doing that to enjoy the lower interest rate versus having to have struggle with money, right?
Yeah.
Most of these customers could easily take a personal loan. They have the credit worthiness and the credit limit to be able to do that. But why not enjoy the low interest rates?
And you're the one providing the credit at this point in time, in the sense that you have lending
currently
partners.
only our model always works through partners. So we work with lending banks and lending NBFCs with partner with us in all our products. So all the products that we've done so far in CRED are through partnerships. This will be also in the same spirit.
All right, Kunal Shah, thank you so much for your time. Absolute pleasure talking to you.
I do have one more announcement to make.
Sure, please go ahead.
You may allow. We are actually doing something which takes the mission forward to not just the credit-worthy, but to all of India. We realize that the whole thing about financial literacy, good consumer behavior, good credit behavior is something that needs to be done for the whole of country. So what we've done is our team, our investors, our leadership have put together 1% of the company of our cap table is now going to CRED Foundation. It's a Section 8 company that will be 100% focused on getting a lot of these things in place, fund a lot of initiatives, and as our companies grows, like this particular thing will continue to grow and support the mission for rest of India and do some ground level work with RBI stakeholders, other regulators, government of India, and so on and so forth. So we are super proud of also announcing that today.
Excellent. All right. Thank you so much, Kunal. That was a fun conversation to be had, and all the best for days ahead.
Thank you so much.